This is Chapter 12, Payroll. So I need you to turn to page 363, and today we're going to do 12.3, Work Together, Preparing Payroll Records. So today we're working with the payroll register. And last block we talked about pay periods and the tax tables that are involved with pay periods. So in calculating employees' pay to get ready for us to make payroll or for us to pay our employees' paychecks, we're going to be using a form that looks like this. So that's your payroll register. In your book on page 363, it tells you that you need to complete the payroll register for the period ended July 15th. So that's the date we're going to use. We'll need to use the income tax tables, and then we're also going to remember that it's 6.2% for Social Security and 1.45% for Medicare. Round the dollar amounts to the nearest cent. Neither employees have reached the tax base, so that meant for Social Security. So once an employee has earned $106,800, you no longer take Social Security out of their paycheck. So that's why you need to know that. Each employee will, we will withhold $60 for health insurance and $15 for an IRA, okay? So here's step number one. We have 2 employees, Edward and Janice. And it's already done first. We already know he's married, he has 2 allowances. This is his regular pay, this is his overtime pay. And this is the same thing as saying his gross pay. So we'll write that here. This is his gross pay. Now, he will have deductions, and deductions are things that are taken out of your paycheck. And your instructions said we need to calculate the amount of the federal income tax. So before I forget, up here, the date of payment, it's payday, or it's going to be payday July 15. And then the pay period is going to end July 15. So step number 1 is we need to calculate his federal income tax. So let's come over here, and we're going to go over to the tax tables, and we know he is married and he has 2 allowances. So that means we need to go to the tax tables for the married rate. And we know he earns $1,432.50. So $1,432 ends up being about between $1,420 and $1,440. So he had 2 allowances. So when I look across at the tax tables underneath the 2 column, it says that we need to take out $61 for federal income taxes. So let's go ahead, and then we're going to write $61 right here. Then as we go across, your instructions say that we need to calculate how much will be taken out of his paycheck for Social Security. And right here we'll make ourselves a note that Social Security is 6.2% of gross pay. So we'll grab our calculator, and let's go ahead and take our gross pay, which is $1,432.50 times 6.2%. And we get $88, and we need to round up, $88.82. So we'll put this in the Social Security section for Edward. Medicare, we said, was 1.45%. So it's the same thing. You will take your $1,432.50 times 1.45%, and you come up with $20.77. So we'll put $20.70 here. They told us that he's going to be getting health insurance, so we'll take $60 out of his check for health insurance. And we'll also, his other deduction will be $15 for the retirement plan. The total means total deductions. These are all his total deductions. So we will add 61 plus 88 and so forth all the way across. And then we will get $245.59. That's the amount that we're going to take out of his gross pay. So to calculate his net pay then, we're going to take $1,432.50 minus $249.59 to get net pay. And that would be $1,186.91. So up here we'll make ourselves a note and we'll put $1,432.50 minus $245.59. And then we got $1186.91. So that way you have some notes. We're going to do the same thing with Janice. So when I look, she's single and she only has one allowance. So as I go over to the tax tables, I need to come over here to the single. And she has one allowance and her gross pay is $971.75. So we'll come over here to $971.75 and it falls between these two. She has, what was that, $971.75. So she has one allowance, so we will be taking $76 out of her paycheck for federal taxes. So we'll come over here and we'll put $76. Now we're going to multiply her $971.75 gross pay times 6.2% to get the amount we'll take out for Social Security, and that's $60.25. Medicare, we'll take the gross pay, so we'll take, let's see, I'm going to do this, gross pay, so it's gross pay times her 1.45%, so that's $971.75 times 1.45%, and then that will be $14.09. She's also getting health insurance, and we're also taking out $15 for an IRA. So once I add up all her deductions, the total will be $225.34, I hope. And then same thing, these are her total deductions, and we will take the gross pay minus the total deductions, and we should get $746.41. Our next step then, because we're done with payroll, we only have 2 employees, is we're going to single rule, and then we're going to add our columns. We'll write the word totals here, and then the total regular pay is $2,240, $164.25, $2404.25, $137, $149.07, $34.86, $120, $30, whoops, I think I lost my pen, $30, and $470.93. Her total net pay is, or the total net pay for both employees is $1,933.32. So pretty soon we'll be writing a check, one big check. So companies have a separate bank account for payroll most of the time. In other words, the only time that there's money in that account is when it's time for payroll. So you, as the payroll clerk, will actually write one big check for this net pay, the $1,933.32. You'll put that in, deposit that into the bank. Then you'll write checks off of that account, these 2 checks, and then you'll have used up your payroll money. Now, at the bottom is an earnings record. So how does someone keep track for your W-2? So a W-2 is what you get come January. So most of you people work. And at the end of January, they give you a W-2 form, and that's the information you need to file your taxes. Well, how do the companies prepare that W-2? They use these records. So they have one for each employee. So it's the earnings record. It's for the quarter ended. So there's 4 quarters in a year. So January, February, March is a quarter. April, May, June is a quarter. July, August, September is a quarter. And so since this is July, it falls in the September quarter. So that's why we're going to say this is September 30th, 2018. Okay? So what's going to happen is quarterly, you as a payroll clerk will be needing to send information into the IRS, basically. All right, so now from your payroll register and the time cards, you're getting all of this information. So Ed was employee number 2, and that's where it said that. And his last name was Johnson. So we're doing the employee record for Edward. His first name was Edward, and he didn't have a middle initial. He was married, and he had 2 allowances. Now, your book told you that his accumulated earnings, oops, I forgot this, rate of pay, he made $15 an hour, and it gave his social security number and his position in the company, sales manager. And all of this is in your instructions in 12-3 work together. All right. Also in your book, it told you that his accumulated earnings were $17,218. And what that means is, as of June 30th, because he got paid twice a month, he had earned a total of $17,218 for the year. So that means through January through the end of June, he'd already earned this amount of money. And that would be gross pay. So now it's payday again. So what we're going to do right here is we're just copying the information. So it's ended July 15. And all we're doing is copying the information we have on the individual payroll register. So it's like 13. We're just copying the same information. His overtime was $112.50, $1432.50. $20.77 was Medicare. His retirement plan was $15, his total deductions. And his net pay that we'll have to write a check for is $1,186.91. So, after payday then, what is his accumulated earnings? Well, he had $17,218, so we're going to add. And we're going to add gross pay. And gross pay is $1432.